Welcome to THINKpod. My name is Francisco.
And I'm Aziz, and at ThinkPod, we speak about the smartest ideas and the biggest challenges facing the world right now. We speak about where we are, how we got here, and where we're going.
In today's episode of ThinkPod, we talk about NFTs and crypto with Nicholas Cary, co-founder and vice chairman of Blockchaincom, who are building a passport into the future of financial services. We discuss what is behind today's super cycle of cryptocurrency adoption, and we ask, do you see legacy institutions and government as competitors or partners in shaping the future of crypto?
So Nick, can you talk to us a little bit about blockchain and your work there?
Yeah, thank you. Just last week, we celebrated our 10th anniversary. It's a little bit of a milestone for the firm, and as a founder, you become very proud of these moments. The last year, though, has been tremendous and extraordinary for a bunch of reasons. We just announced that we've achieved over $1.5 billion in revenue. We've had over $1 trillion worth of value exchanged on-chain, which is really exciting, and over 1/3 of all worldwide Bitcoin transactions originate from Blockchaincom wallets. We've also built out sort of two sides of our business that are really important to differentiate. So at Blockchain.com, we've been primarily known for building a wallet. We've had over 80 million people sign up for that. We have 32 million verified users, and we've seen faster growth in 2021 than at any other point in our company's existence. Now, the wallet's a really important piece of kit. It allows you to send, receive, secure, trade, and exchange digital forms of wealth. And we're able to deploy this globally, which is really exciting because it allows us to go to markets, not just in the United States and Europe, but actually in emerging and frontier markets too. So that little bit is really key. But on the other side of the company, we also have an institutional business, which provides over-the-counter trading, custody, asset management, active network participation, and we even have our own venture fund that we're placing capital into all kinds of really exciting entrepreneurial projects that I'm happy to talk about too. So all of that put together is kind of where we are today. So Blockchain.com is really sort of building a passport into the future of financial services, which is one of the topics I think is most important for us to talk about today.
What are the key points that are fueling that growth, do you think?
It's interesting because we've seen sort of adoption waves in the digital currency or cryptocurrency industry. And there was sort of an early cohort that showed up in 2011. There was a surge in 2013, in 2015, 2017. And then this year, we're potentially entering what would broadly be described as a super cycle of adoption. Now, in marketing terms, you always have some early adopters. You got to try to cross that chasm and get into the mainstream. This year, we've seen sort of three concurrent themes all coalesce simultaneously. One, you have some macroeconomic conditions that we need to talk about that are driving a real discussion about how do I protect my wealth and where can I invest capital that I have to basically have opportunities in the future. You also have a cultural movement around crypto. Maybe you heard about NFTs, non-fungible tokens, emerging art that's being created by people all over the world, and major brands stepping in to build unique experiences for sports fans in the content and media space. So there's all kinds of cultural things happening that are creating all kinds of new crypto-curious users all over the world. You also finally have institutional adoption that's really coming along. And that was always sort of a question mark in the space, like when are the big guys ever going to get involved? Are they going to try and crush it? Isn't this thing competitive to them? And the answer is they're starting to show up. And so those three themes have broadly driven increase in adoption across the entire ecology of crypto services. We've been a major beneficiary of that, both on the retail and what we call the institutional side of the company.
Let's take an umbrella view of just crypto overall, right? You're entering a space where there's a lot of legacy institutions, right? And then there's ways how government go about things. Do you see them as more of a other side? Are they competitors or are they possibly partners in shaping the future for crypto and for blockchain overall?
Yeah, so let's talk a little bit about the last century. I think our investment community and broadly the world's entrepreneurs and the governments had a huge responsibility to transfer our world from one that didn't have electricity yet to one where we had information highways, right? So they had to lay down tons of infrastructure, bridges, ports, highways. You know, we invented all kinds of things that improved the state of the world and helped reduce poverty. And certain things got a lot cheaper and certain things got more expensive. It's important to study this. Things that got cheaper were all driven by technology. Cars got cheaper, phones got cheaper, computers got cheaper, other things got more expensive. Healthcare got more expensive. Real estate got more expensive, commodities got more expensive. A lot of things that are subsidized by government intervention in markets got much more expensive, whereas things that were driven by private market investment got much, much cheaper. So our investors of the past century got really good at reorganizing molecules, things in the physical space. But over the next century, we're going to get really good at reorganizing electrons. And here's the big thesis. over the next 10 years, we're going to see the internet become the greatest contributor to worldwide GDP. And we have to build a financial fabric that's nested natively into the internet so that people, regardless of the circumstances of their birth, can begin to coordinate their efforts, coordinate their capital and their human talent to build stuff that's useful for humanity. And if we build a financial service utility that can be engaged with by anyone in the world, regardless of the circumstances of their birth, you're going to bring along billions of people to make them economic actors in this new economy that is digitally native from the beginning. And so we're going to need everyone to participate in building this. So the opportunities for the traditional financial services are, one, to stay competitive, be innovative, and also engage with Gen Z, millennials, and all the digitally native young people around the world that are observing their world become liquefied and digitized quickly. So it's not to say it's one or the other. There's a merger that is happening, but I would say that the technology is deeply integrating, deeply disintermediating, and quickly changing the business models for previous entities that sat around on rent seeking, which basically the entire financial services industry has benefited from for hundreds of years now. And so the market is evolving and money is evolving, and the idea of money becoming digital seems very obvious to me. But this is still a leap of faith for many people. That faith, I think, is crystallizing now into a source of truth. But if we think about it, and I'll end my lecture here in just a minute, human beings have tried all different kinds of money before, right? Money is a concept older than written word. We find examples of pearls and small vases and things like that that were created in the Middle East as far away as in tombs in Scotland. And so humans have been experimenting with different ways of trading and exchanging wealth since we started collaborating. And we used gold, we used pearls. In the mid last century, we started using paper money. And we've been running a fairly aggressive financial experiment, especially in the past 18 months in response to the pandemic. So we've had very loose fiscal policy from central banks, which has vastly inflated the total supply of currency. So here's the rub. If all of us are doing what we're told, we get a good job, we go into press, we go into media, we become a doctor or a dentist or a lawyer, and we save some of our income and we put it in the bank because we're being responsible stewards of our wealth. Just right now, you will be losing your wealth by doing so because there's negative inflation rates in the dollar, the pound, the euro. There's increasing worldwide inflation and is being underreported because the large entities and the institutions that create these statistics have a very strong reason to not cause panic. But unfortunately, you have a really dangerous set of circumstances that are going to harm a lot of people in the world. So how do we respond to all this? Well, maybe we can invest and build tools that help people protect their wealth and also give them more agency over how they manage their money. So we're now having this interesting conversation about, well, what does the future of money look like? And if we could invent a form of money for the age of the internet, what properties would we give it? What would its economic policy be? What kind of people and what permission should they have in order to use it? And I think it's pretty obvious that we should build tools that enable as many people in the world to participate in an economy as possible. This unlocks human capital, this unlocks human innovation. We get more entrepreneurs, we get more diverse entrepreneurs, and we get more wealth creators that look more like the composition of the fabric of the world and less like what we've inherited. And so to me, it's so extraordinary to watch what is happening in the cryptocurrency community because now you have an asset class that's owned by more people than any other asset class in the history of time. And it has all forged itself, basically out of an idea, which was that we can do a little bit of a better job and maybe leave this world in a slightly better place than we inherited it.
You mentioned that a lot of people who go to their job, they have some leftover money, they save that, they go with conventional investment methods. They're losing their money at the moment as we speak because inflation is killing that, it's being covered up, right? Through your platform, what are you doing to engage with the youth, who are right now watching and worried about this? Because a lot of them are like us, they're doing the same thing. How are you engaging with them to make sure that they are able to store their wealth and they're able to actually make a return on their investments?
I think if you're thinking about it just as an investment, it's probably a risky thing to be getting involved in. Crypto has some very notable projects that have been around for a long time, have large communities of investors and entrepreneurs and open source developers curating these platforms. You also have a lot of nonsense. So you've probably heard about meme coins. These are literally digital tokens that are jokes. Some of them have gained huge amounts of following though. And so maybe a joke does have value. I can think of many comedians who I would go pay to watch their show, and maybe there's some sort of social value in owning some of that joke. But I think in terms of like hardened economic networks and digital assets that have features that I would want, then I think about things that have native scarcity. I think about what type of inflation schedule those currencies have. And the best way to think about cryptocurrencies is really an open network that's itself a central bank, that's minting newly created value, and people are participating in it voluntarily. And then they're trading other things that they own for those tokens. And once they have them, they can buy stuff online, they can buy stuff in the real world with it if they choose to. And this is all happening voluntarily, and it's all happening at a very fast and increasing rate because young adults especially are starting to observe the world they're inheriting, and because of the macro conditions, but also because we're all digitally native. We don't want to go wait 5 days to get a bank account at some traditional Main Street bank, and then they ask you all these intrusive questions, which by the way, we also have to do if you're going to comply with some of the anti-money laundering and know your customer laws. But the difference is we can do it all digitally. So you can be at home, you can download an app, it's free to do, you send in your identifying documentation, and you can get into the crypto economy in 90 seconds. If you compare just that experience with how long it takes to set up a bank account with a traditional financial services firm, you're already seeing why young adults are turning to it in the first place. And even if you don't believe in crypto and you don't think that digital assets of that type, like Bitcoin or Ethereum or some of these other ones, have the economic composition that you find valuable, you can also store digital representations of fiat currencies. These are called stable coins. These are super valuable in countries that are experiencing significant individual currency decline. So Turkey has seen a crazy devaluation this year. We have hyperinflation as Venezuela. So a lot of the people in these countries are turning to digital wallets that have things like stable coins in them, which are just US dollar, euros, or pounds pegged and tokenized. So you can have something that is at least a mainstream currency sitting in your wallet that can also settle and clear on these open ledger fabrics. So that's a pretty cool feature too, because you can just send 10 or 15 or 50 or $100 from the United States to your family in El Salvador, or from Dubai to the Philippines, and it's clearing on a blockchain technology, but it's a digital stable coin. And so basically what I'm saying, this is when I talk about the merging of both the old and the new, it's happening at an extraordinary rate. And so well, the neat thing about crypto is that you get into it for a whole bunch of different reasons, whether it's financial inclusion, or maybe you want to invest in a future protocol because you think it's going to have a lot of value. There are networks that are fit to purpose, built for gaming, fit to purpose for artists, fit to purpose for musicians. And we're going to see some exciting new business models come out, especially in the content industry. That's been a big theme this year, and we should probably talk about it a little bit more.
You mentioned meme coins. I had kind of circle back onto that. What's the difference really practically between, say, like a Dogecoin and a more serious coin like Solana? Like practicality, the value is derived from what people invest into it.
Yeah, so here you have a really interesting sort of, I would say like almost philosophical question, which is like, what is money, right? What is its value, and how do we determine that? So partially it is, I think, broadly understood that money is a social consensus around how we trade wealth. And so we've used those different systems I talked about, whether it was coins or dollars or pearls or gold, and now digital currencies. And some of these digital currencies, even though they are jokes, have achieved large-scale network effects. And so in large-scale network platforms like social media platforms, they get increasingly valuable the more people participate in them. And so I'm not sure it's for me to say what you find valuable or what somebody else finds valuable. I would just be cautious for consumers and retail customers and anyone new that's exploring this to dig into how these currencies are being developed, who is actually backing them, if they have thoughtful governance, do they have foundations that are encouraging developers to contribute more code and innovate and make these things faster, more reliable. Are they able to be traded across multiple reliable venues? Just like stocks are traded in exchanges in digital currency land, there are cryptocurrency exchanges. How many of these venues have listed these different assets? How long have the assets been around? Are there founders or leaders that are actually talking about why these things have long-term utility? The point is that a lot of these experiments are running concurrently. Some projects have been around for a long time. Some are very new. Solana is a good example that has a lot of backing from major investors in Silicon Valley, and has also put together a significant amount of what we would describe as ecosystem funding to support grants for young entrepreneurs that want to help contribute and build stuff on it. And so you're seeing artists, you're seeing developers create NFT marketplaces and all kinds of new experiments on some of these new fabrics because they're a little bit more efficient than some of the older ones.
What are your thoughts in terms of NFTs? Do you think it's a fad? Do you think it's a legitimate industry? I mean, it's quite a diverse, broad spectrum.
I don't think it's a fad. If I was a musician, and I am not a very talented singer, but if I was thinking about how I would control my creative content, and I considered going now to a major record label, I would sign up, maybe they would hold and control all of my work for 5 decades, and I get very small percentages of all the wealth that would be created out of my personal work. But if I compared that to maybe, basically tokenizing future of all the streams that I ever get for my music, and I distribute some tokens about my fandom to everyone that likes my music, and they actually get compensated for listening and sharing my music too, I think that is a way more interesting model. And that's not just an NFT, but NFTs stand for non-fungible tokens. I can imagine a world where all the personal information that we're creating all the time, our health records, our heart rates, our blood sugar content, all of the medical records you have would be NFTs stored in a wallet passport that you would have the privacy to share with whichever doctor you chose to. And then of course in the art world or music or for authors, anyone in the creative industries, there's extraordinary opportunities now to own the real work that you've created. And so I think we're just at the beginning of this, but imagine if Michael Jordan owned that famous photo of him jumping across the huge court and slam dunking that. He doesn't. That photo is one of the most reproduced sports images in the history of time, or the famous Muhammad Ali punch. There's going to be enormous use cases in the sports world, in the gaming world for NFTs. That's the cultural zeitgeist of the whole cryptocurrency economy.
So Nick, you're super cool, and you're very passionate, and you're working in a space that a lot of millions of people are watching right now. And as a young leader yourself, right, looking for what kind of legacy you're trying to leave for the future generations from the work that you're doing right now.
There are 2 things I care about. So when I got involved in digital currency, I really wanted to build a better form of money. And I wanted to hopefully help shape a world where it didn't matter where you were born, what color your skin was, that you'd at least have an equal starting point. I think it's fair to say some of us are going to end up in different places. You might be much faster than me in a 100-yard dash, and you can maybe sing better, but our outcomes can be based on our merit. And the geographies we're born in or the circumstances of our birth shouldn't prevent us from being able to at least run in this race. And so building financial tools that help individuals manage their own money and their own wealth and their agency is tremendously important to me. The second, though, is that we need to inspire more entrepreneurs. We need more people building cool things, clothing us, feeding us in the real world, building cool stuff in the digital world, and that composition of entrepreneurs needs to look more like the fabric of the world. So we need more diverse entrepreneurs. We need more women entrepreneurs, and they need to build stuff for communities that look like them. And so I've taken the vast majority of my wealth and placed it in the long term to work on supporting entrepreneurs from disadvantaged backgrounds. And so I started a charity called sky'sthelimit.org. I'd welcome anyone that wants to help us build that community to join. We basically match underrepresented entrepreneurs with mentors and advisors from great companies and also other entrepreneurs to help them think about how to build their business. And they can come from any background and they can be building any kind of company. We don't care. We just want to help you practice. And just like Michael Jordan didn't become the world's greatest basketball player overnight, he had to take 100,000 shots. It takes some time to get good at building businesses and become a successful entrepreneur. And you also need a lot of help. You need good advice. And transferring the social capital that is held, especially in our corporate partners and the big entities in the world, is important.
Well, thank you so much, Nick. We appreciate having you at ThinkPod, and thank you so much for your time.
Thanks, guys.
We would love you to let others know about this podcast. So please rate us, leave us a comment, and share with someone who might enjoy it too.
And don't forget to hit the subscribe button so you don't miss out on our next episode.